This is Eric with Mother.com with a weekend market analysis for the weekend of March 9th and March 10th, 2019. With about half an hour to go before the close of the week, close of Friday's session, let's take a look at markets. And this is where your main averages are trading, again with about 30 minutes to go before the close. So after 10 straight weeks of positive closes as far as the Nasdaq is concerned, really we shouldn't be too surprised to see that the market is finally seeing a pullback after those 10 straight back-to-back positive closes. Now the question we are all trying to figure out, frankly, is are we going to touch this level next, or are we going to be testing this level next? I think that's the big question. Yes, we all see the pullback. We've seen the V-type formation, a slight pullback now. The big question is, what is likely to be the next scenario? Are we going to back to these highs, maybe break out? Are we coming back eventually to test these lows and maybe break down? Those are the big questions we are all trying to figure out. Coming into this week, we had already observed that the Nasdaq was coming to a level of potential resistance on this weekly chart, as we can see, connecting the highs there of 2008 and this line here, highs of late August 2018. We were suspecting that there was a good likelihood of resistance here, which is exactly what we got this week. As we go into an options expiration week, let's make sure we account for the RSI 50 on the weekly, because if the Nasdaq drops below 50 on the weekly RSI, expect a big down week net. Now keep in mind we're going into an options expiration week, so we can anticipate an increased volatility or increased volatility just because of the options expiration. Markets is going to be going all out to confuse all of us. Just keep that in mind. Volatility might be the name of the game. Again, watch that RSI 50 on the weekly. Any slippage below 50 might suggest a big down week net. Now this is a 2-year weekly chart for the Nasdaq. If we pull back and take a look at a longer period, let's do that. So here's a weekly chart for the Nasdaq going back to 2014. Of course, to the current price levels here. Of course, there is that top side line we just looked at. That's line number 1. So let me draw that again. We got line number 1, as we've seen. And we also looked at this backtest line here, which was line number 2, which we had seen as of last weekend's market analysis video. And we had drawn line number 3 going back to 2014, something like that. And to be clear, we get this line from connecting the previous highs on the Nasdaq, on the RSI, and then we did break out above this level here. We turned into support throughout the rally in 2017. A break below the line here, a break below the line recently, and now here we are again. So we can see those 3 lines were projected to give resistance to the Nasdaq, and we can conclude that until the Nasdaq can clear and move above 3 lines, this market is, let's call it sideways at best, bearish at worst. If we take a look at the Nasdaq, we can see RSI 69.1 rejection, which would have given us pause around current levels at the highs here. It would be similar to this period where we see also a double top, RSI 69.1 uniform activity rejection. which gave us these highs right here. Could it be possible to find a relationship between this break and this movement low, and this break here, and this movement low? Any relationship by using the RSI? Well, I'll propose one line, which should be from here, and I'm going to extend the line. And what we get from this line is we get a break of the line here, coming off the highs there, back test failure, give us this daily closing high and a pullback, back test failure, resistance and a pullback, resistance here for a shallow pullback. And over the last couple of week or so, we've been trying to move above the blue line, but the market has been rejected. So that's the relationship that connects this high and this recent high. If we take a look at the Nasdaq 2 hourly, we can see that if we check these lows here, this is where the RSI came out of this range. We can take that line, and using my uniformity method, you can see how we have bounced, came close to the line here for the lows there, and here we are seeing the market coming and showing support, which might explain why we are coming off the lows of Friday's session. So as long as that line is holding, then the market is beginning to stabilize after a recent couple of days to the downside. And let me give you a number that we can watch for possible. Either the market is going to be holding back and recapturing the recent breakout level here. As you can see, we broke out, and that was a good short-term breakout right here. The level to watch there for the Nasdaq is 7402.08. Goes back to this daily closing high. And the conclusion is very simple. Anything back above this level would definitely be very constructive and bullish. Otherwise, if the Nasdaq fails to hold and is trading below this level, we can use that as guidance that the market continues to be looking like it wants to test lower price levels. So anything above this, definitely bullish. Anything back below this level can be used as a reason to lean bearish. And again, what the market is trying to do is recapture this level. Anything above it is constructive. Anything below it is a sign of a market that could easily continue pulling back. That concludes the free portion of this video. The rest of the video is for paid moathe.com subscribers. Enjoy your weekend.